Toronto is seeing huge housing news again. Doug Ford just handed Olivia Chow a massive $114 million in bonus for crushing our Toronto housing targets set by the province. So, what does this bonus incentive structure tell us about where Toronto's housing policy is headed? And what's in it for Toronto real estate investors moving forward? Well, for us as real estate investors ourselves in Toronto, we personally prefer to take on projects. And so this news is music to our ears and probably anyone else who also shares a common mindset with us. And if you want to learn more about this, just stick around because we're about to break it all down. If you're new here, we're all about helping you make better real estate investing decisions in Toronto. Don't forget to like and subscribe if you enjoy our content. Let's dive in. Ontario created a Building Faster fund to encourage more new housing, and here's how it works. If a city hits 80% of their target set, then they can get a chunk of this fund. And when a city exceeds these targets, then they can potentially get more. And get this, Toronto exceeded our targets by 51%, and this is how Olivia Chow got Toronto a $114 million check from Doug Ford. Here's the lowdown. This bonus is a game changer for Toronto, and it's really going to shift how the city approaches funding for new builds. Before this change, most of the money that Toronto got from new builds came from the housing creators themselves through hefty development charges. And these fees actually shot the city in the foot because they're very hefty and discourage creation of new housing. But now with this new reward system from the province, Toronto will be way more incentivized to make it easier and cheaper for housing creators to crank out new housing and cash in on those more lucrative provincial funds. So, how do we make it easier for people to create more new housing? Well, it's all about cutting the red tape and sweetening the deal for people who want to help expand the city's housing stock. The first one was zoning, and we've tackled a bunch of that already in the past couple of years, and that's probably one reason why our housing starts shot up in Toronto. As of last year, each house in Toronto is now allowed to build up to 4 units plus a backyard house. And moving forward, hopefully sometime this year, more homes on major streets could be allowed, and you might be allowed to build up to 30 units, and that would be huge progress. Now, parking requirements was also another issue, and that's scrapped as well, which is another big move forward. But let's talk about the biggest hurdle moving forward, development charges, or DCs for short. In our opinion, this is the ultimate red tape, and it's really got to go, but we have seen a lot of progress already, to be honest. As of last year, the hefty DCs are waived for developments of up to 4 units, and for backyard homes as well, they're either waived if it's within the 4-unit limit or deferred for 20 years if it's above that. Now, as for what's in store for the 30 units on major streets, that really is still up in the air. But given this new bonus system, we feel that it's probably likely that the city will want to slash DCs here too. Just take a look at City of Toronto's financial statements from 2021 and 2022. In 2021, the City of Toronto raked in $365,000 from DCs and then $344,000 in DCs in 2022. Now, if they scrapped DCs, they might lose out on this $300,000 to $400,000 a year, but in return, they're scoring a massive bonus from the province, over 300 times that. So that is totally worth it to us. On top of this, hopefully the city will work on speeding up the permitting and inspections process too, but maybe that's too much to ask for now. But really, the bottom line is that the investment landscape for real estate investing is improving. And for Toronto real estate investors willing to take on the work, it's starting to look more and more worth it. In the end, it is a win-win for the province, for Toronto, and for those willing to create more new housing units. And it seems like housing policy is headed down the right path alongside with interest rates as well. And both of these are going to benefit Toronto real estate investors. And perhaps that's why the Toronto real estate market has been a lot more busy since the start of this year. And it really was like a flip of the switch. Demand shot up first in January, and now listings are following, which does help us find more supply on the market. But unfortunately, we are seeing a lot more list slow plus offer date strategies once again. And in these starter markets that we typically invest in Toronto, these selling prices have also shot up pretty quickly, around 10 to 15% higher in price since the start of this year already. Now, it might sound like we're trying to induce FOMO, but it's really honestly just a Toronto market update. We on our team prefer a calmer market. The purchase price ends up being a lot more predictable in this case, and it's just easier to snag really good deals for our clients when the market was quieter. But because the market has been changing pretty quickly, the numbers have changed a lot since just a couple of weeks ago. So here's a quick update on how the top deal on our list looks like these days. One of the deals we've been eyeing is a property that's listed for $870,000 with an offer date. So realistically, it's probably going to sell higher than that, closer to $950,000. And once you put in $150,000 of renovations work, then you can split the single family home into 3 one-bedroom units, which will get you a combined rent of $5,900 a month. And after operating expenses and mortgage payments, you're looking at a pretty strong positive cash flow of $700 a month. So this is why this deal looks good to us. Number one, by adding more units, you get better rental income and cash flows for holding power compared to a single family home. And number two, if you look at comps with a turnkey 3-unit home in the same area, it's valued at around $1.2 million these days. So you get $100,000 of value add bump quickly when you create 2 new units yourself. And if you want more information about this deal, or if you're just curious about what Toronto real estate investments would suit you best, just give our team a shout. We're not your typical real estate sales brokerage. Instead, we focus on using numbers to make better real estate investing decisions in Toronto. And that can mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value add renovations or focusing on gentrifying areas. If you do want to discuss your private real estate situation with us, just head over to this link to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.